Let's get in Sameer Bhise. He's the Managing Director and Co-Head of Research at BFSI and GM Financial Institutional Securities. Sameer, good morning and thanks so much for joining in. Sameer, we are talking about financials in general, specifically banks, large banks which have come out with earnings. What is your overall assessment for all the private sector banks which have already come out, and what you're making of them?
Yeah, hi, good morning. Thank you for having me on the show. So we have been slightly circumspect on the overall financials as a sector, primarily emanating out of two drivers. One is obviously growth is slightly slower, led by the deposit challenges that the system continues to see. Also, we are entering a phase probably since last 6-9 months, wherein credit costs will normalize, and specifically some pockets, which is unsecured loans, will see some bit of high credit costs. So companies which are more exposed to these kind of segments may see some bit of volatility in earnings, and that continues to play out. I think this quarter, from whatever numbers we've had till now, was no different. You've seen credit costs go up for unsecured segments, tepidness in overall business momentum, and also a bit of margin pressure, though probably slightly less than what we had seen, say, 6 to 8 months back. So that's the backdrop we are operating. I think in this context, some of the large private sector banks we continue to like. They have reasonable cushion on balance sheet with respect to excess provisions. They have reasonable cost of funds advantage, as well as a diversified loan book. So that way, I think large private sector banks are relatively better placed. Our preferred picks are ICICI and Axis. Yeah.
Before we talk about how well Axis did on Friday, let me get your view, Sameer. It's Savina joining in on Kotak. Are you disappointed with what you saw? Because the street seems to be.
Yeah, I think there was a bit of a disappointment, primarily driven by the fact that the margins declined worse than peers, which was slightly surprising. And also the credit costs, especially slippages, went up on a sequential basis. So we have a hold rating on Kotak. I think that stays. Having said that, Kotak still remains reasonably high ROA bank, though some of it may be under pressure in the quarters to come. But yeah, I would call it slightly a weaker result, if you ask me.
Right, but you still maintain your call on Kotak, which is a hold. Would you add more?
We have a hold rating, yeah.
Would you add more in today's weakness? The counter is down 3.5-4% as we see it.
I think the outcome on result, I think we haven't changed our target price meaningfully. Neither is the rating, so we would stay hold here.
Concerned are you about the overhang by the regulator? Because until that goes away, there's a good possibility that Kotak will reel under pressure. And secondly, also credit card slippages. I mean, this is a bank that's well focused on risk, and to see them seeing slippages here could be an early indicator of what the industry is going to see in the next quarter?
No, I think industry is already seeing it, and Kotak is also part of the same trend that we are witnessing across most banks. So it's not as if it's a harbinger. I would say that it's an industry-wide trend already, and that is also reflecting in Kotak's numbers. And about the RBI embargo, yes, all eyes remain focused on how it shapes up and when it is lifted. But I think it is still some time away. That is what we understand on the recent disclosures.
Okay. As far as some of the relatively smaller PSUs are concerned, Sameer, how are you reading into what we can expect going forward as well, and anything that stands out for you?
So I think in PSUs we have a buy rating on State Bank of India, the largest public sector bank and largest bank as well. I think it remains our preferred pick. Amongst the second round names, I think it is more pick and choose on how one is looking at the earnings momentum. But if one has to look at a broad sector backdrop, I think SBI looks much favorably placed than most other PSUs, which is why we prefer it over others.
Sameer, I don't know whether you track the space, but some of the insurance companies, AMCs, are pulling out strong earnings. Anything that you like?
I will have to disappoint you there. I don't cover them directly.
Okay.
So
Yeah, so in your pecking order, what is the 3, 4 banks that you're currently buying post earnings?
yeah, so we have a clear preference for larger names over smaller. As I highlighted, ICICI, Axis, and SBI are our preferred plays.
All right. And Sameer, when it comes to insurance right now, if there is, all right, okay, fine, cool. Maybe we can actually, move on, and you want to come in on
Yeah,
this one?
Sameer, just very quickly, did you see RBL's earnings? Market again is very disappointed with what they've done. Stock is down 10%. Now, does this become an opportunity for a medium or long-term investor to go out and buy it? And also, you did tell me that you liked what you saw with Axis Bank, and it is your top pick. You want to elaborate
Yeah.
on the key triggers for Axis as well in the next few quarters? What could be the key growth drivers?
So I think growth momentum has still upside for Axis eventually as things normalize in the sector as a whole. They have significant cushion on the balance sheet, more than 1% of loans in excess provisions, and margins probably seem to be bottoming out. While there could be a rate cut, I think the impact will be felt across the industry, and you can't single out one bank over other. But generally, I think they have reasonably they have managed the balancing act between margin and growth reasonably well. So which is why our preference stays on Axis. Also, valuations were supportive, quite supportive last week, and that is why our preference for Axis. RBL, I won't be able to comment. We don't have a formal rating on RBL Bank.
Fair enough, Sameer. We'll leave it at that. Thank you so much for joining us and taking us through your views